Hey guys, welcome back to this channel. Now in this video, I'm going to make a bit of an instructional video as to why Bitcoin really goes up and down. Now the reason why I wanted to make this video is because there's a lot of weak hands in Bitcoin. Usually when people get in, they're not totally concrete on the fundamentals of Bitcoin and why it's truly valuable. So when the price goes down or there's some news event, they're very quick to sell because they're not truly ideologically associated with the core purpose of Bitcoin. They're in it just because the price goes up, which I don't really think that's a bad thing. I think that you should want to get a return on your investment. But I think it's really important to understand what's going on behind the numbers on the screen when you see the line go up or the line goes down. It's really important to understand the true fundamentals of why Bitcoin goes up and down. Now, in order to explain this, I want to go into a little bit of a tangent in explaining the altcoins real quick. Now, the reason why I want to do that is because altcoins are not going to perform as well as Bitcoin in the long scheme of things. And the reason why is because altcoins serve a tech purpose. It's a technological instrument, whereas Bitcoin is less of a technological instrument and more of an economic instrument, and it's made to solve an economic problem that we have in the world, which is that the currency that we use isn't backed by anything. It's in a constant and perpetual state of inflation, and the value of the money that you have in fiat terms is going down constantly. Its real value, that is, right? Everything's going to become more and more expensive over time, and that is baked into our financial system in every country around the world. There is absolutely no escape from that, and Bitcoin was designed to solve this problem, whereas altcoins and stuff like that, there can always be new altcoins, and the idea is that they're trying to create, financial tech, right? They're trying to create the latest technology that will, be like an improvement on money, and things you can do with it, maybe by creating smart contracts or, other kinds of interesting financial technology related services. But because you can always create more and more of these altcoins, ultimately it doesn't really serve the purpose of what Bitcoin was originally meant for, which was to solve the problem of inflation in the long run. So the reason why Bitcoin does this so well is because there is a limited amount of supply. So if I look here, I can see that at this current moment, since 2024, which is the last halving, we can see that 93.75% of all Bitcoin has already been mined. Once it's all been mined, there isn't going to be any more. In comparison, you can see when it comes to the US dollar, you can see that the purchasing power has gone down ever since the beginning of the Federal Reserve in 1913, which essentially gave the banksters the ability to print money into infinity. And as you can see, that the dollar value has just continued to go down and down and down. Yeah, Bitcoin is basically providing an alternative form of payments, an alternative way of holding currency units without it being subject to inflation. Now, when it comes to the day-to-day of when Bitcoin goes up and down, it's usually going to accompany what we call a news cycle in the Bitcoin community, and it tends to go that the news will follow the Bitcoin price rather than the other way around. So if the price goes down, there's going to naturally follow news headlines that explain why the price went down, but often they're not directly correlated with each other. It's kind of it's like a correlation or causation type of thing, and it usually comes after the fact. And when the price goes up, then there's going to be news headlines that explain why the price went up. But again, it's a correlation, not causation type of event. The most important thing to focus on is the fundamentals, and the most important fundamentals, number one, is the fact that we live in a system where the dollar continues to devalue over time, and this is something that's baked into the system. When you're buying into Bitcoin, in a way, you're shorting the current financial system. You're extracting yourself from the financial system, which is predatory and continues to inflate currency. And by getting out of that system and not having, a currency that is constantly being devalued, the value of the thing that you're owning is going up. So that is like the number one fundamental. And number two is the velocity of money, right? So the more money that is going into circulation, the more that's going to have an impact on the price. And this is most often represented in the federal interest rates, right? So the central bank will come out with what their interest rates are going to be, and then commercial banks and then later on individuals will take on all of these all these freshly printed banknotes, and the central bank will have a policy about what the interest rates are depending on what the inflation numbers are. If inflation is high, they will increase the interest rate, so that way it's more expensive to borrow money, so less money is going around, there's going to be less money being borrowed, and that is going to have the effect of what we call quantitative tightening, which means there's going to be less money in circulation. If there's less money in circulation, then money is what you'd call less cheap, and less of this money is going to go into assets and stocks, like you've got like the S&P 500, gold, and crypto. So usually when there is quantitative easing, so when interest rates come down, money becomes cheaper to borrow, so there's more of this liquidity, there's more of this money velocity, and that money is most likely to end up going into assets, which are considered to be scarce. Like real estate is considered to be scarce, so people will buy that. Gold is considered to be scarce, people will buy that. Stocks are technically considered to be scarce, although they can always technically just print a bunch of stock, but for all intents and purposes, it's scarce. Therefore, money will just flow into these things because it's a protection from this inflation, and that's ultimately how most investors will evaluate the current situation. It's just simply, if interest rates are low, then they'll buy stocks. If interest rates are high, then maybe they'll go into cash potentially. And another thing I want to mention, and this is something that's useful to learn about, is just the degree to which this inflation happens, because it happens on so many different levels. So when you look at this chart here, where the central banks will set the interest rates, commercial banks will borrow from them, then individuals will borrow from these commercial banks, really what's going on fundamentally is the central bank is basically just printing money out of thin air. It's not being backed by anything. This is a huge cause of inflation. But another thing that goes on, there's additional forms of inflation where you see the commercial banks are told that they need to have at least 10% of their total deposits as reserves, and then they can loan out the rest of the 90%. So you ever hear of the term bank run? So a bank run happens when you've got all the individuals, they've deposited funds into a bank, and if they all decide to pull out the money at the same time, the commercial banks will run on empty. They actually won't have enough funds to cover their depositors because they've actually loaned out upwards of 90% of their total deposits to other people. So they only got 10% of the deposits on hand. So that's why bank runs are real. It's something to really be scared of, because commercial banks don't actually have the funds on hand. They loan it out. Now, the real problem with inflation is that when an individual or even a central bank, when they deposit money into a commercial bank, the commercial bank now has the ability or the right to loan out 90% of what was just deposited. So let's just say my name's D-Bang Dave, I put $100 into a bank. The bank is going to keep $10 for the side, then they're going to loan out $90. Now, they're going to loan it out to another individual called John. John, let's just say he takes out a loan for, say, $90. He gets that from the bank, which came from me. He's going to take that $90 and he's then going to deposit it back into the bank. Not for any particular reason, it's just that tends to be the end destination of his money. I mean, maybe we'll just say he goes to a car dealership and he buys a car for $90. That car dealership is then going to put that $90 into the bank. The point is that all roads lead to Rome. All the funds will end up back into the bank, right? So let's just say John, he takes that money and then he puts it into the bank, or maybe he gives it to the car dealership. The car dealership puts it in the bank. So there's now another $90 that's gone into the commercial bank. The commercial bank will take 10% of that, put it to the side, so they've put 90 cents aside, and now they can re-loan again $8.10. They'll loan it to someone else. That person, we'll call him Steve, does the same thing that John did. He will then go buy He maybe it's a business loan, he puts it into his business, but ultimately that money goes back into the bank one way or another. The bank will then, take 10% of that, reloan it out infinitum, right? Ad infinitum. This money can be loaned and reloaned and deposited and deposited until basically you've practically got an almost uncountable infinite amount of money that was created out of nothing going on, over a period of many years. This money can just go on and on and on and on. And this is why inflation is such an unstoppable issue, because we're in a situation where the money is backed by nothing and we can creating it out of thin air, whether that's the central banks or commercial banks. We basically are in a free fall where we are on a collision course with our currencies collapsing, and this is an unsustainable Ponzi scheme, right? Now, this wasn't always the case. This is not what normal finance looks like. Throughout every society, we were relying on gold and silver. Now, gold and silver were considered scarce. Now we could always argue, the libertarian Ron Paul / Bitcoin maxi argument is that, what about an asteroid? What if we start mining gold on an asteroid? Wouldn't that just tank the price of gold or whatever? But the point is, throughout history, gold has been hard to achieve. It was very hard to extract from the ground. It was hard to refine. And even now, I don't think gold is as good as Bitcoin, but it's still relatively scarce. So throughout all time, people were using this relatively scarce instrument to trade things. That was it was a perfectly fine system that we had for thousands of years. But every now and then, like a civilization, a society, a city will get greedy, and the people at the top, the elites, whoever it is, the government, will decide, we want to have a monopoly on the financial system, and we want to create our own currency. And maybe what they'll do is they'll create their own coins. Maybe it's copper coins, silver coins, gold coins, whatever. They'll issue it, and that'll be, and people will be forced to trade with it. That's what we call fiat currency. That means the currency is given value because the government or the powers that be have determined that's valuable, and everyone has to use it. So that's what makes it valuable. Basically, if you don't use it, you're going to come under the threat of violence, essentially. Now, what happens under this arrangement every time, after a long enough period of time, the powers that be will start, cutting their coins with inexpensive alloys, right? So they'll put a bit of like lead with the silver, maybe with the gold, they'll put some other alloy in it and they'll mix it down. And that way they can, if they've got a control over the printing press of these coins, then they can basically print money for themselves, and everyone is basically having their money stolen from them through inflation. But it's a very sneaky form of theft. And then when this happens, over time, the civilization will go into decline and eventually collapse, because this is ultimately a Ponzi scheme at a societal level. And this happens in every single society. It happens again and again and again and again. And we are just currently at the stage where this is now the thing that's in vogue, and our society will inevitably go through a financial collapse because of this. Ultimately, because our money is not sound money. It's not based on gold. It's not based on silver. It's not based on anything scarce. So as I mentioned, going into Bitcoin is simply a shorting of the financial system, which is a Ponzi scheme, and it's inevitably going to collapse. So that's why price of Bitcoin continues to go down. But within the micro, right? So like this is the macro lens. This is why Bitcoin is bound to go up always, right? In general. But on the micro, like when you see Bitcoin going down by 20% in a week or something like that, or going up by 50% in a week, there are a few micro things that we can analyze, right? That's not related to the macro entirely. So usually, the biggest causes for these mini cycles that occur is because of announcements made by the Fed changing the interest rates and going into a dovish or hawkish stance. So the biggest things that have influenced the price of Bitcoin in the past 3 months have been the Fed announcing that it's not going to be as sorry, I'm just trying to find it. Wait, sorry, it was already here. It was simply the fact that the Fed was not going to reduce interest rates as expected. They were reducing them, but there's only going to be 2 rate cuts whereas last year it was assumed that there'd be many more. So as a result, a lot of speculators got burned. They had to pull out their cash because they had longed the market, and they're using things like leverage, which I think I'll speak about in a moment. And as a result, people's expectations as to whether or not the central bank is going to tighten or expand this Ponzi scheme ultimately becomes the focus of speculators who are trading with leverage to basically go in or out of the market. And most people, like when the price goes down by like even something absurd, like let's just say tomorrow the price goes down by 50%, it's not actually ordinary investors like you or me that are selling their Bitcoin. Typically, it's like these large institutional investors or maybe these large retail investors with millions of dollars of liquidity who are levering up, maybe 2, 3, 5, maybe 10x the amount of money they have. They see, oh, we hear, maybe there's not even something in the newspaper. They just hear, they've got a rumor, maybe they've got some insider information about what's happening in the Fed, that there's like a 70% chance that the Fed is going to increase interest rates, maybe because of some inflation data. That is impetus enough for them to like create, to pull out all their longs and maybe even create a short position. And just from these like temporary speculations, right? Because you can't hold a long and short position forever. That has to even out. So if you go long and you sell your position, that's the equivalent of going short, right? So you didn't really fundamentally change the market. You weren't permanently going in or permanently going out. It's a temporary position that eventually evens out. The point is that these speculators have a big impact on the market. There's like maybe 0.1% of the overall crypto market that's actually involved in this large-scale leverage trading, but this has like a big impact on what's going on the micro. And the other thing is as well is our proximity to the halving. So the halving has a really big impact on the supply of Bitcoin. So as we can see here, so we've got this chart here, and the first number that we see to the far left at the bottom is 50. I can't expand it. You'll just have to visualize with me. So in 2009, when Bitcoin was founded, every time a block would be mined, which could be every, 10, 20 minutes, whatever, 50 Bitcoin would be created out of thin air. So Bitcoin is actually an inflationary currency. It's just less inflationary than dollars. And ultimately, Bitcoin is going to completely run out of block rewards at some stage, and it's going to get to the point where there is going to be some inflation, but it's going to be so minor. So as we can see, in 2009, there was 50 Bitcoin that was rewarded for every block mined. Then in 2012, 25. 2016, there was 12.5. In 2020, there was 6.25. And by this stage, in 2020, there was already 87.5% of Bitcoin mined, right? So the point that I'm trying to point out is that most people in Bitcoin understand that when there's a halving event, there's going to be a supply shock. And it might not be immediate, it's usually quite delayed. But at some stage, you can guarantee that because there's going to be less Bitcoin in circulation because of that it's becoming less inflationary, just through supply and demand alone, the value of Bitcoin is going to go up as a result. So if you know that the Bitcoin halving is around the corner, you should buy, and that's what most people do. Most people buy around the time of the halving because they know of this phenomenon. As we can see here in 2024, the current block rewards are 3.125, with 93.75% of all Bitcoin in existence already being mined. So the inflationary pressures are getting less and less, and just purely from supply and demand on from the Bitcoin supply, it's going to the value is going to go up. It just kind of baked into the cake. It just has to go up unless everyone decides to suddenly stop using Bitcoin, which isn't happening because the amount of Bitcoin addresses and the Bitcoin network continues to expand. Hash power continues to expand like dramatically. Wallet addresses continue to expand dramatically. So barring some kind of like massive capitulation in those factors, the Bitcoin price is going to go up simply because the supply, the inflationary supply keeps going down. And as we can see, the next one in 2028, we're going to have only 1.5 Bitcoin mined every every 10, 20 minutes. And you might say, I mean, at the end of the day, like, it is somewhat more consequential than it would seem, because I want to point out the fact that back in 2009, 50 Bitcoin would have been worth like 2 cents, right? Or something absurd. You know, by the time of 2028, I mean, who knows, Bitcoin could be $1 million by then. You know, one block reward of 1.5 Bitcoin, I mean, could actually be like, who knows, by then, maybe even $1.5 million. But spread out over such a large network, over so many different people, overall, it's got less effect on the overall supply of Bitcoin in the market. So ultimately, it will be, if anything, less significant, just because there's less Bitcoin. So ultimately, when you see the price go up or you see the price go down, don't think it was because something happened actually in the market. Don't think it's because there was some news event, you know, because there's going to be a lot of FUD. And I really believe, I don't really think this is a conspiracy, I genuinely believe there is an intention for larger players, we'll just keep it vague at that. I genuinely believe they want the more smaller fries, the smaller fish in the sea, to sell their Bitcoin, and they'll pump the news cycle with a bunch of stories that are ultimately what you would call FUD, F-U-D. That's fear, uncertainty, and doubt. And they'll tell you about the latest war, the latest economic catastrophes, and this thing and that thing. But fundamentally, Bitcoin is just going to continue doing its thing. It's going to continue to go up because of the things that I mentioned, because we live in a world where the finance system is essentially a Ponzi scheme that is only going to continue to inflate. It's never going to go down. And number two, because Bitcoin is going to continually be reducing in supply. And as a result of those two things, Bitcoin is just going to keep going up. And then there are the tiny micro cycles, which I mentioned, which are got to do with, you know, the cost of money becoming cheaper or maybe more expensive. But those are all temporary things, right? But they just affect, you know, the price, these mini cycles, right? You know, these mini bull and bear markets. Bitcoin is permanently in a bull market ever since 2009. We've had a number of like little economic cycles. So 2009, 2012, 2016, 2020, 2024, all based on the halving. But at the end of the day, Bitcoin is an overall cycle. It's an overall bull market because the price continues to go up. But we do have these little micro cycles based on the cheapness of money and based on the halving. So ultimately, calm down. Don't sell your Bitcoin. Buy more Bitcoin. Everything is going to be okay. So guys, if you like this video, make sure to check out my channel. You can subscribe, and if you're interested in buying cryptocurrency without KYC, you can use my referral link in the description down below for local coin swap. That's a great website that you can use to buy cryptocurrency using a vast variety of different payment methods, everything from cash to TransferWise to Revolut, etc, etc. You can also use HODL. That's a really good non-custodial peer-to-peer crypto exchange. Non-custodial meaning that if the exchange went the way of Mt. Gox or FTX, it's okay because none of your funds are actually on the exchange. So when you're dealing with a seller, he's going to send funds directly to your cold storage wallet, so it doesn't touch the exchange at all, which is a great idea. And you've also got BitValve as well. I highly rate that exchange. It's just very user friendly. So thanks a lot for watching, guys. If you're interested, check me out in the next video, and I'll see you next time.